G'day everyone. This is Rangadad, not financial advice, just the way I'm looking at the market. Try and do a relatively quick one today. Most of the key stuff was covered in yesterday's video anyway. Basically, we just broke into the downside of a pennant. And we are still in the bear zone. So you'd pretty much call it a confirmed breakdown of that bull market support line. And although we haven't retested it in a way that I'd like to see, it might actually be all we get. So yeah, for the time being, the bear market is on. And yeah, bounces should be met with sell demand, but there is a caveat here in that there's a potential double bottom going to form, and that's based on one, we didn't clean up all the liquidity that was at 76-ish, 75, 6 months. So we actually left, we got close to it, but we left quite a chunk of liquidity here, and it shows up better on Model 3 on the 3 month, I think. Let's go. Yeah, so we sort of, this thing, that's 48 hour. So it's this bit here. We left a little bit much for my liking there. And ever since then, I've sort of been a bit cautious that we could be coming back down to pick that up. Noting that there is a fair bit above as well. But what we could be doing here is just basically pulling back into that area to form a bit of a double bottom. And the reason I'm leaning towards that with a little bit more certainty now is the stats on the speed of the drop on the S&P 500 are basically in 2 months it should be, positive, so we should get a bounce over the next couple of months. But typically you do actually see at least a retest of the low, if not a like a sweep of the low. So that's kind of what I'm expecting will happen here. Bitcoin will follow the market in general. What we don't want to see is really smashing through these levels, and there's a few ways to look at the S&P 500 at the moment as well, but we'll get into that later. I think that they will retest the low, most of them. So yeah, liquidity wise, today in particular has just been sucking in some short liquidity, going up and taking it, and then coming down, taking the long liquidity. There is quite a bit coming into the charts around that 83, 84K level as well. So potential bounce up into there, got to consider it, but overall, the dollar values up here compared, like on Model 1, for instance, they're not huge that are coming in just recently. Okay, I think it's going to just be chopping around, sort of grabbing this, coming back down for the next couple of days anyway. And FOMC is going to be a big one, so we might even just go sideways today, just chop sideways. I will actually have a look at some of the data, the economic data that's come out this week, because there is some interesting stuff in there. But yeah, basically, liquidity levels are interesting during this sort of time. I think that's going to help us get the bottom. Yeah. Jump straight into the economic data. Sorry, I'm feeling a bit slow this morning. So Canadian stuff that came out today is particularly interesting. The other thing is the Chinese stuff that came out the other day. So retail sales was up, industrial production was up, fixed asset investment was up. So unemployment rate was up a little bit as well, which probably offsets these a bit. But what this could be showing us is a little bit of the bullwhip effect, and we may get a bit of a dead cat bounce, but it's also potentially going to support the move in Chinese stocks, and the Hang Seng has broken its previous high as well, so it's kind of supporting that. Do I think China's in a healthy spot? Not particularly, but it's looking healthier than the rest of the world pretty much at the moment in terms of the chart. Housing starts was down for Canada. Foreign securities purchases was way down. Core retail sales was flat, but retail sales month on month was lower than expected. Core retail sales was actually a bit higher than the previous read as well. So, there is a positive and a negative sign on this read for US. Yeah, market didn't seem to like it though. We had a lot of chop around then the other day. The interesting one here, so German economic sentiment is actually back above 50. Generally, that's okay. Italian trade balance was way down on predictions. That's not a great one. Economic sentiment in Eurozone. Oh, where is that actually? That's Germany. So that's not great. Trade balance came in as expected for Euro, but Canada's an interesting one. So Canada CPI yesterday or last night, my time, came out and pretty high read, really. Like CPI, median CPI, trimmed CPI, common CPI, they're all higher than predicted. That is definitely a reason for markets to get a little bit nervous. But building permits and housing starts in the US was actually up a little bit. So that's kind of a read in the opposite direction as well. Import prices were up though. So I guess the market's probably going to look at that as the economy, housing part of the economy, real estate is probably looking a little bit better, but this import prices, they're going to look at that as potentially affecting inflation. So that's the whole tariff narrative will play into that. And that's why, potentially get a couple of days down. And that's going to make the Fed's decision tomorrow really interesting. They're in a tough spot at the moment. They're going to be looking at a lot of the overseas stuff, thinking, okay, global economy is looking shaky. US economy is looking pretty shaky, to be honest. But have they got too many reasons to suspect more inflation to come in? Industrial production's up in the US as well. So again, that's kind of suggesting that the economy is not too bad. Capacity utilization is up. Where's the other one? So the interesting ones in the next couple of days before the FOMC meeting, the Japanese core machinery orders, trade balance, probably more obviously the Bank of Japan policy rate decision. They're expecting 0.5%, so expecting it to stay the same. There is actually some reasons why they might want to increase that. Wages are still going up in Japan, and they may take advantage of that to actually increase rates. So that's a tricky one. We'll have to wait and see. But if they do surprise and increase rates, then that could be quite negative for the US market. Industrial production is going to be an interesting one for them as well. So a little bit of stuff that could affect the markets before the FOMC comes out. And then this will be an interesting one for me. So most bond auctions have been generating higher yields than normal and less bids per auction. So if we start to see that happen with Germany as well, it would suggest start of a bit of a credit issue globally. Well, I mean, there's already suggestions that that's started, but so that will be an interesting read. And then you've got CPI coming out in Europe as well before we get to the Fed funds rate. So this will be a very interesting decision that the FOMC has coming up. I have a funny feeling they'll hold it, and I have a funny feeling that'll lead to a sweep of the lows on the market. There is a chance that it'll actually crash the market further. So again, sort of 1 foot out the door, be pretty careful. But if they do change the Fed rate, even if it's 0.25%, that could actually push the rally from the lows. So if we get another sort of downside into that decision, and that's getting towards the end of the market, so we could drop again during normal market hours in the US, and then right towards the end, once this comes out, we could actually find that bottom. It's kind of what I'm expecting, but there is a lot of turmoil in global markets. I would say there's just a lot of negative reads. There's a lot of confusing reads for the market. So see what happens. And then obviously later on in the week we got unemployment data coming out, so that could move the markets a bit more as well. What you want is for basically unemployment to stay unchanged or even go up a little bit. So unemployment claims, because that'll give reason for the Fed to actually lower rates if unemployment rates going up. All right. Sentiment, smart money's still high, starting to roll over a little bit yesterday, which is kind of what you expect. Dumb money's piling in though, so got to be a little bit careful here. And this is sort of one of the reasons I think it might come down is a lot of people have started going long very quickly, and it just seems like there needs to be a bit more leverage wiped out of the system. IBIT, interesting dark pool trade here. 37th largest on IBIT, traded well above the actual price. Don't know who's buying that, but whatever. Kind of stuck in a range at the moment. Hasn't actually broken down in the same way that Bitcoin has, I don't think. Have to have a look at that over a longer time frame just to see if it had the same wedge or not. Oh yeah, it broke a similar sort of wedge to the downside. Coinbase, interesting trade there. It's holding this this level here, which that's an interesting one for me. I mean, this could be these guys getting out of part of their position. They might have actually taken some profit there as well, but no fantastic read off that. This is interesting for me though. There's a couple more trades coming through on the 2x long Coinbase ETF. That is a positive sign. A little bit surprised they're coming in now though after the break of that wedge. So that's kind of why in the title I've said, is it a full breakdown or is it just a conversion from a pennant into a bear flag? We'll have a look on the charts as well. Mara, Mara wasn't really showing much. Mara's actually dropped quite a bit more, and I'd say the reason there is that Bitcoin is below its break-even price for miners, so that would make sense. Consumer staples is pulling back a little. Kind of expect that if you want markets to go up. Consumer discretionary looks like it's finding a bit of a double bottom here, so no huge trades coming through on this though. That's kind of I guess a little concerning that the market in general, that was a pretty good sell up there, but the market in general is expecting a little bit more downside on this, it would seem. Healthcare, these were good sort of bottom trades. Looks like it still wants to go up. That is a defensive sector for the most part. Financial sector hasn't had any big trades at the highs here too, so that kind of gives me a little bit of confidence that we will actually bounce. What you don't want to see is a massive trade coming through at these highs here, because I would expect that to be a sell. And you don't want financial sector to really collapse. Utilities, probably a pretty good sell there. Yeah, not. I mean, utilities pulling back would suggest that people are moving out of defensives. Technology sector, big trade there. It's pulled back a little bit, but again, I'd expect this to find a base somewhere pretty soon after FOMC, regardless of how far FOMC drives the market, and it potentially will drive the market down, but I would expect it to base relatively soon after. At this stage, like still waiting on some sort of major economic news that'll spook the market. It's actually a decent move up here on Bitcoin. It's probably going to get some resistance around 82,900. The fact that it's cleared these above the 13 EMA, that is of interest. Spot CVD yesterday, that fact that we made a lower low on this and price hadn't made a lower low from this point, that did sort of suggest that we were going to pull back a little bit further. I was surprised how slowly this happened through here, but then obviously slowly and then all at once. And CBD's kind of recovered through both of these bottoms here. So that's a fairly positive sign. Little bit of red coming through on the bid-ask delta, but there was the other thing that sort of still had me wondering if we were actually going to like break to the downside. This here was the retest of that wedge. Was the fact that there was so much green on the bid-ask delta. It just seemed like people were hitting the ask quite a lot. So there was a fair bit of buying through the lows here. Whether it stops here and we keep going up, or whether this is just a bit of a bounce before continuation of the downside, we'll have to wait and see. But there's a couple of things we'll look at in a second. Okay, so we've actually, that's interesting. Either that was closed. I think this one here might have been closed. It's a big drop, $40 million drop. I don't think the wick of this actually hit it. 82,446.8. 82, maybe. But either way, it actually looks like it's taken that level, and it may want to keep going to the downside but now. Like there's potentially a little bit more to come up here, but that was a pretty decent chunk of liquidity that it just took out of the system. So, and there's a pretty good target down here at 8806. Look, I'm kind of still expecting some continuation of the downside, but let's have a look at the charts. So the 15-minute is looking strong here. We've recovered the 13 EMA. All my CBD indicators, momentum indicators and stuff, they're all pointing to the upside. The forward backward EMA oscillators pointing to the upside after a good base. So is the reverse EMA. Everything's pointing up at the moment. We have just taken the bottom of the 1 hour Bollinger Band channel as well. So we're back inside the Bollinger Bands. Typically that would lead to at least going to the middle of the Bollinger Bands, which is sitting at the 200 EMA as well. So I kind of expect it to take that level. Recovery of this vector candle here, sort of retest of the 50 EMA. That's nothing wrong with that. Even a wick down into the bottom of the Bollinger Band channel, which would also be a wick down into basically the 13 EMA. That's not a bad thing either. That would sort of be a confirmation that, okay, this is a proper break at that level and we should continue up. What we don't want to see is instantaneous sort of move back down and break back below the 1 hour Bollinger Band, or even a 1 hour close back below it would suggest that this was just a liquidity run. I mean, typically these things have a bit more to go to the upside though. Cumulative volumes going with it. I'm kind of expecting this to continue to the upside. So this is what makes it tricky for me, is that we have broken that pennant to the downside. And you just look at this chart and you say, well, okay, Bitcoin's rolling over here. Momentum is still to the upside. BBWP's moving down, but you just look at this. If we close, and this is the thing, we may actually close the daily back above the middle of this channel. And that's a pretty important level as well. That has been a really important support and rejection level previously. Just look at this on the 1 hour in a second. Is there anything else I wanted to cover? Yeah, so this level 2, and you'll see it on the 1 hour, but it could actually, on the daily, it's actually a bit lower than that. It's actually 84,280. If we close a daily back above these candles, basically the open of that candle, which was 84,308, then that should actually be quite positive. But for the time being, that is a pretty heavy resistance level. And you look at this, the break of this wedge, and typically that would suggest we're coming back down to the bottom of this channel. And currently, today, the bottom of that channel is at 76,687. I would fully expect us to break into the 75s and potentially mid to low 75s, maybe even a little bit lower. But it depends when we do it too, depends how quickly we come down, depends if we come down. But at the moment, that looks more likely than not. Now, looking at it on the 1 hour, so this could just be vector candle recovery. Same thing on the 15-minute. There's not many vectors up here. So there was sort of 2 levels here, or at least a region for the bottom of this wedge. Sorry, mental block there. Basically came back up, retested the 50 EMA on the 1 hour, and retested this region and broke to the downside. Realistically, that should normally lead to a pretty decent downside move. And we measured it out the other day, and it was basically below this wick here. This is pretty well coming up and retesting the midband of that channel again as well. So got to be careful of sort of little fake outs here. At the moment, it does look reasonably strong, but yeah, it's pennants like wedges like this. Find them to be not super strong with Bitcoin. You can get big runs after they break, particularly the upside. If this broke to the upside, I would fully expect it to play out the full extent of that move and be back up into 90K. But downside breaks can be a little hit and miss. So just be careful on shorting it as well, especially if it's going to be choppy over the next couple of days. And especially around FOMC, that's going to be a pretty big event. You could get stopped out in both directions with that event. Just looking at total versus stable coins, same sort of deal. Basically broke the same way. Yeah, it's until proven otherwise, it's in a bear market. Like we still haven't really confirmed this breakdown yet in my eyes. It could just be this is a region, this bull market support line. So we don't necessarily have to come back to it, because this could be like, sorry, just trying to articulate, like this could be a region, so could be more like that sort of region, and we did break down, retest, retest again, and we've broken away, which could be a full bear market signal. Just if the US market does recover from here, I actually would expect Bitcoin to come back inside that, back above that bull market level. I mean, it's got a lot of work to do to get there based on what I'm seeing, but it wouldn't surprise me at all, especially we come down, we bounce from this level here. That would be a better sort of bottoming signal, and probably at the same time the market's doing it. The key is, can the market handle another sort of drop into that level without flushing through the way the economy is looking and the way the big guys haven't really bought back in at the same degree of what they were selling across the top. So a little caution there, but generally I'm liking the 1 hour and the 15-minute at the moment, just to get markets. Almost spot positions are out. They were out up here. So I'll have a quick look at Litecoin. So, oh, hang on, sorry. So what I was kind of pointing at before is, have we actually got a flag starting? So there is a potential argument here that we're actually flagging now. So that was a wedge. Yeah, the wedge broke down. But we could be in a bigger wedge now as well. So it could actually wedge through here and then break to the upside. It could literally just be a bear flag. And a bear flag like this, let's just... So bear flag could do this and basically come in, hit the top of that channel, and then break to the downside, and then down we go. That's kind of something I'm considering as a possibility here. And what you tend to find sometimes, what you can find is, yeah, pennants will break, turn into flags, and then they can actually break in the opposite direction after that. So realistically, we only had a couple of data points on this pennant. It was a good pennant, good break, retest of that. So got to be careful that this isn't just a retest of the middle of this channel and then further down. But for the time being, you're probably going to be looking at the same sort of thing. If it does come back down here, you want to see a break, retest, and then move to the downside. Let's see what happens. Quick look at Ethereum. So, oops. Yeah, Ethereum's basically the same. Litecoin's similar. Litecoin's kind of finding a bit of a better base here. Like it's already pulling back a bit further. Sol is similar. Sol actually had a bigger sort of triangle happening. So yeah, I'd expect some, if we do come back up in here, I'd expect some more resistance up there. Off a pretty decent horizontal level as well. So Sol, that's probably going to be resistance if it does bounce up to that point. But yeah, Sol could very easily come back down to 109, even $100 on Sol. XRP. Ugh. XRP's got a bit of a upper channel here as well. That's kind of a sell zone. Breaking below that at the moment and retesting it. XRP does look a bit different to Bitcoin in terms of it didn't have the same sort of pennant as such. Very aggressive move up. Obviously, it has had a bounce, and this is a break of trend back to the downside. So it's putting in lower low, lower high. So XRP needs to kind of change that trend around, which at the moment it doesn't really look like doing that, but see how it goes. XRP does have a vector candle in here down to about $2.13, which you'd kind of expect it to sweep that low. That's a potential bounce area, sort of 212, 213 on XRP. But yeah, it's kind of at the moment, they've all got a lot of work to do to get back above decent levels. Tron having an interesting time of it. Yeah, Tron's Tron's bucking the trend, which is strange. Justin Sun might be having some say over that. Hyperliquid. Yeah. All right. Into the Qs. So Q's come back down and has retested this little trend line here. We'll go to the daily. I kind of expect that to pull back further in tomorrow's trade before FOMC. But the skew read's going to be interesting today. So the skew was up yesterday, and we've actually pulled back a little bit today. Kind of an inside candle, like we haven't really broken the lows of the previous candle yet. So just expect fuckery tomorrow, basically. If the skew's up again today, I'd expect generally you will end up sort of not really breaking too far below these lows. But if the skew actually crushes again, like comes down a lot, then could actually get some continuation to the downside. So it's I'm kind of surprised we didn't hit the 200 EMA as well. And that to me suggests we aren't done with the upside yet. I think yeah. To me, it looks like this will potentially come back down a little bit further. It doesn't have to, but it's accumulation in this area. Same on pretty much everything. Not going to go into detail on everything here, but at this stage, that's a continuation of the downside. The SPY actually did hit the 200 EMA. We pointed out yesterday and rejected off it. So continuation was likely, but it's not collapsing here. I think it's just more accumulation and wiping out some long positions in preparation for FOMC. Yeah, so ES hit the 200 and pulled back as well. Equal weight, same deal. Equal weight's got a lot of support around here. Equal weight has recovered these vectors, but so yeah, that'll be interesting. But for the time being, equal weight's actually getting some buying off the low as well. IWM, similar sort of deal. Just some relaxing after these guys with buying the dip. No real reason to panic that it's going to go any further at the moment. Just wait and see what comes out. XLIs actually looks like it's a retest and a confirmation above the 200 EMA. XLY, XLP. So that's coming down still, but yeah, not breaking this low. If we start to break this low, then I'd be concerned, but till then, it's just accumulation. XLP versus SPY, even it's coming down. So that's suggesting that there is a bit of upside to come on markets. Equal weight, same sort of deal, not breaking new lows. This one's a good one. So this is the equal weight XLP versus SPY. And it's sort of broken. You'd almost call that a retest of that trend line and still pulling back. So even though the markets were red, this is pulling back. This is what we want to see. We want to see this come down at least into this support, if not back into this trend line. So this is supporting the argument that there should be a bigger move to the upside, bigger bounce. KRE still getting support off the lows as well, so wicks to the downside are a good sign at this point. Same with financials. Financials struggle a little bit around here with the 50 EMA, but it's got a gap and lots of vectors above, so it's not looking too bad. These are still not looking great though. So home construction and home builders, I actually expected them to bounce a little bit more. Home builders has kind of recovered that support level, so that's not too bad. But I'd like to see these move up a bit more for more of a confirmed upside move. DJI Gold's teetering on the brink again. Same with DJT Gold. This could be basing as well. Still not looking great though. Just supporting the fact that we could have another day or so down. This probably concerns me a little bit more. DJI is rejected off the 200 EMA and off that resistance line, which basically the neckline on a double top. That's more concerning. This thing probably needs to get back above there fairly soon. Otherwise, it's going to come down a fair bit more, and that's going to be hard for markets in general to move up if that one's coming down. So that's a bit of a red flag. VIX bounced a little bit today. So as I said, the skew was up yesterday. I want to see that come up again to be generally bullish. But yeah, it's still looking like a potentially choppy market. The one-day volatility actually spiked quite a lot, which that spiked a lot more than spiked a lot more than what I expected based on the amount stocks moved down. I did expect this to actually only have a little bounce, but we'll wait and see how if that continues to the upside as well. It's going to be a pretty good indicator for the overall direction. At the moment, I think skew read's probably going to be the one I'd look at with interest there. So DAX recovered the vector candle, pulled back a little bit from the high. Did it make a new high? 23,476. It did. The close 23,419. Didn't make a higher close, but made a slightly higher high. That's, yeah. I mean, the DAX is still looking surprisingly strong. The bond auction tomorrow is going to be an interesting one for the DAX. So Chinese market or Hong Kong Hang Seng Index, that to me is getting pretty close to overbought, but at the moment, it does look like one of the stronger markets out there. Get rid of that. Ugh. What you probably want to look at on this one, if we start breaking down from here, it's not a bad little trend line supporting that. Breakdown of that would suggest more downside. Quick look at the other markets. Yeah, just sort of hitting key levels and resting a little bit. UK market's still above that trend line. Kind of expect it to make its way up a little bit more. China 50 has pulled back a little bit though, so could just be back to candle recovery. Potentially back into 13,428-ish. Looks a little bit stronger though than what it did here when it was just blasting up and then straight back down. So this could be a proper move to the upside. TLT's jumped a little bit. I think the expectation is the Fed might reduce rates. That would make sense based on this chart. Could go on a pretty decent run too. So even if they keep rates on hold, the press conference is going to be important, because if there's suggestions that the economy is weak and they're monitoring closely and they're ready to cut, then the market could react to that and just, it's a forward predicting market. It'll potentially pump TLT and drop yields, which dropping yields should lead to a bounce in the market. Yeah, nothing really doing on high yield. Trend is still up on this bond indicator as well, so looking okay. Yields, I mean, they're generally trending up, but it does kind of look like a bit of a dead cat bounce. This will be an interesting one for a head and shoulders if 10-year comes down and breaks back below here. Copper's still going. Still hasn't quite recovered this vector candle. So again, that's kind of supporting a stronger market. But gold, good breakout on gold. If we get another confirmation of that, it's going to be an interesting buy level. Aussie one's flat just because based on Aussie dollars. Silver versus gold. Silver's going with it, but still not as strong. US oil pulling back. So, I I mean, that's good for CPI. Don't know it'll get much lower than this. I think 64 is supposed to be the break even for US manufacturers at the moment. There is a bit of support around that level. Yeah. Still needs to break below that to suggest a bigger drop. Now, Dixie is in an important region. Actually looks like it wants to move. Oh. It's getting overextended. BBWP is quite overextended as well. I think this is still a pretty good area for accumulation and a potential bounce. Euro. Ooh, Euro is actually pushing out of this area. Could be a little fake out, but one to watch. A weak US dollar would push potentially gold, Bitcoin, and stocks a bit higher all at once. Global liquidity has actually jumped, which is good. So we are seeing an increase in global liquidity. That should help support the markets. What's this one saying? Yeah, it's going up as well. So I think people are going to look at that and think it is time to buy. Percentage of stocks above 50 days actually up still as of Monday. So see what it's like in today's read. Mag 7 still looks like it wants to break down a bit further. Let's close that gap now. So we'll see. Could be a little fake out to the downside. This is beaten down pretty hard. The Mag 7 have had a rough, rough start to the year, really. You'd kind of expect these to start bouncing, especially if we don't get any major economic shockwave. Nvidia, yeah, just accumulation area. Could be a retest of a break above a decent level too. I'd be a little bit concerned about this chart, but Google, big buying support on the break of that low. Yeah, it's been a pretty key level for a bounce historically around that 160 to 157, maybe a little bit lower even. 155 to 160 seems like a pretty good support zone for Google. That is a vector candle. Vector candle at the low like that could suggest lots of buying support though too. Yeah, look, I think just waiting for the news really to confirm where the low is. Everything's coiling at the bottom. Not seeing any major signs. Meta's touched that trend line, which is good. I did think it needed to recover that fully. That's full vector candle recovery in here too now, plus a gap close, I think. Yeah. And Meta's ready to bounce. Airbnb's been ready to bounce for a little while, but we'll see. AMD just pushing on this trend line again. So AMD looks like it could break to the upside. If it doesn't, then look out below. But AMD has been smacked down pretty hard, so it does suggest that we may get a bit more upside. SMCI is not looking great though. ASML, again, testing some key moving averages. We covered these gaps. Seems like a pretty decent accumulation base here. Pretty good volume on TSM as well. Again, looks like accumulation. This is an interesting one for me. So the volume on Stellantis around these lows has been quite massive. That fact we haven't had continuation after the earnings drop suggests that we could be forming a base there. Same with Ford. So Ford's had an uptick on pretty massive volume. So that would support generally the economy to go, it'd support markets, the rest of the markets to have a bounce. Aussie market, still not looking great, but again, accumulation in an area that's had a lot of trading previously. Not a bad sign. Momentum is still to the upside even after a down day. So I still think this is a decent level for a bounce. QRE. This was a good buy the other day. I didn't actually buy into the 200. I bought into the resources sector just because it had been accumulating for so long, and it is quite beaten down this year already. I just had a little nibble at the lows last week. So if the rest of the market does break to the upside, this should go pretty well. Yeah, that's about it really. ETH BTC, these guys are still going. Holy shit. Like Ethereum does kind of look like it wants to base against Bitcoin and head up in a big way, but man, they are so underwater at the moment. They're like Mariana Trench kind of underwater. BTC longs, people are still long in this dip pretty hard. And that is a good sign. Oops. All right, just wanted to show Bitcoin in relation to that. Yeah, they're not selling off as though we've started to find the bottom yet, or that we've started to go up on a run. But as you can see here, these guys will keep continuing to buy the dip as it keeps dipping. They will keep buying. What you don't want to see is a massive drop after we pump to like 88, 90K. If you see a really big drop then, it's probably going to be a fairly major high. All right, I think that'll do for today. Have a quick look here. Yeah, we are. Oh, yeah, it's looking nasty. It does actually look like this was just a liquidity run. Still above the 13 EMA on the 15-minute, but these things are starting to roll over, breaking back below the 1 hour Bollinger Band. That's actually not looking good. 81,875. closed just above the 13 EMA there. But rejection of the 50 EMA too. Generally, if you've got a downtrending market like that and you reject the 50, there can be more to go. So look, at this stage, it does look like we may continue to the downside. It hasn't left any vectors here. Obviously, there are still some a bit lower, but I don't think it'll worry too much about that. It's more these are sort of going to be your targets back down into these vector candles, and potentially 76.4 level was a previous vector candle from the start of the pump as well. So it'll be looking pretty bad if we're getting down there, but that's just what's gonna have to be considered. You gotta wait till the close of this candle to decide what I'm going to do here, but a closure back inside that 1 hour Bollinger Band, yeah, I'd probably be okay with actually taking a long. It's dicey though. I'll be using a pretty close stop loss on this. If I long from here, the stop loss on it's going to be like 81.8.